I'm John Batchelor. This is The John Batchelor Show. Gordon Chang, my colleague, Forbes.com. The Chinese economy, the question mark over these anecdotes and stories the last months about the sagging economy, the disappointing economy, the downturn in manufacturing, in fact, in all metrics. There is the official economy, and then there is the banker's measure. Gordon, we begin with the official economy. We have a PMI a PMI number in from the official government, that's the Communist Party, and it is better than expected, correct?
It certainly is. The Purchasing Managers Index, which looks at the manufacturing sector, the official one was just released a few moments ago, and it shows an increase, which means basically people are seeing an expanding manufacturing sector. It's 50.3. The significance of that is 50 is the dividing line. Anything 50 and above is expansion. Below 50 is contraction. The Chinese economy, or the manufacturing sector, at least according to the National Bureau of Statistics, manufacturing is getting better according to the official numbers.
It's slow growth, but it's over 50. It was under 50. And we're joined now by Andrew Collier, Managing Director at Orient Capital Research. Andrew, before we celebrate the good news, there is a story at Bloomberg I'd like your help on. It points to a risk of Chinese economy growing at 3%. That sounds really good, given what the GDP has been in the United States since the Great Recession. However, the word risk tells me that people are not happy with it. Why not, Andrew? Good evening to you.
Good evening to you, John. People are not happy with that because we've seen, for the past 5 to 10 years, we've seen growth of 8, 9, 10, actually an average of close to 12%. And all of a sudden, we're now talking about 3%. That number is lower than I've seen. I think the consensus now is about 6% for the next 5 years. But if you think of China, think of all those buildings they're building. Think of all the copper they're using. Think of all the steel they're using to build bridges and apartments. All of a sudden, that consumption of steel and copper globally starts to halve. You go from 12% growth to 6% growth. That means your commodity consumption is going to fall way off the charts. So even though it's way above what we're seeing in terms of GDP growth, it's a lot less than people were thinking even a couple of years ago. So they're getting a little nervous now. If you're a guy who's a copper investor, or if you're a person betting on that global housing market or whatever, all of a sudden you're seeing that consumption fall off the charts, and so you're saying, that makes me nervous, and it also makes the Chinese nervous.
Well, it certainly should, because, they claim 7.5% growth for the second calendar quarter of this year, but if you start to adjust for inflation, make a proper adjustment for inflation, look at electricity, look at the manufacturing surveys, price indices, and trade data, you can make an argument that China's not growing at 7.5, but is growing maybe 2, 3, or 4. Now, the significance of this is that in 2010, the economy grew at 10.4%, or maybe even faster. And so there's been a sudden deceleration in the Chinese economy. So it's not just that there's also been a big fall. That big fall has occurred quickly, and that's bound to have some sort of consequences. Wouldn't you think?
Yes, I totally agree with that. I mean, there's been a lot of debate about the statistics, about electricity consumption, about use of plastics, and a lot of other areas. But I agree with you that all the data indicates that the GDP growth is probably even a little bit slower than the government is saying. But I don't think it's quite as disastrous as 3%. I mean, Bloomberg itself was, I think, writing stories a year ago saying 10 or 11% would be slow for China. So, I mean, I don't trust necessarily what all these economists down on Wall Street are saying. But I agree with the basic premise that this growth is going to be a lot slower than expectations, and that people have to adjust. And that includes the Brazilian iron ore companies, Australian banks, Chilean copper producers. There's global implications to the slower growth, and I think it's taken a while for the investor base to understand this.
Gordon, there is a story in the Wall Street Journal pointing to the fact that countries are making very attractive offers for wealthy Chinese to come to their country, an entry fee, $1 million, $2 million, $3 million to set up a business, and you can quickly get your visa or you can gain citizenship all over the world, Australia to Caribbean islands that are looking for Chinese millionaires. Now, is this a story just to charm us for a day, or is this telling a story of flight, not only of capital, but the rich men who have deep pockets?
Absolutely, John. What we're seeing are people trying to get a second passport so they can put their families abroad, they can put themselves abroad when the time comes. We see money leaving the country in all sorts of different ways. We saw the foreign exchange reserves drop $41 billion in June officially, and some people say they actually dropped $48 billion. And as these numbers get worse, the official numbers get better, like this PMI that was released by the National Bureau of Statistics a few moments ago. It's moving in a direction that nobody expected.
Well, heck, they could have made it 51. I think they're being modest. Andrew, now look, if there's an economic cycle and there's a downturn, there's going to be a bottom and there will be a better day. So how does that lead to millionaires and billionaires fleeing to the Caribbean islands? Is there something underneath this that worries them even more than a deceleration?
Yes, there is. And in fact, you've raised some very good points. I think there's an interesting split between the rich and the poor in China. If you spend time in China, which I've done quite a bit in the last 6 to 12 months, the relatively lower classes and the middle classes are fairly optimistic. They think the government's going to step in, and property prices, which have quadrupled in the last 10 years, they expect them to continue to go up. But if you talk to the government guys with the People's Bank of China, which is the central bank of China, or officials in Beijing, they're getting very nervous because they're seeing a debt crisis like we're seeing, we just saw in Detroit. That kind of thing is playing out all over the country. So they're starting to take their money out of the country. And I have 4 friends right now starting funds to help Chinese move money offshore into property investment in Los Angeles, San Francisco, and New York. So I think that there's a whether the bottom is near or far, I think is a debatable point, but nonetheless, the senior people are nervous.
And also, there are those stories, Andrew, about the Chinese snooping around Detroit looking to buy assets, which means that Detroit is better than Beijing, Shanghai, Guangzhou. I mean, this is really very interesting behavior, which you don't see in a robust economy.
Andrew, the banks, the question about how big the credit bubble is. Are the banks no good and it's an open secret?
Well, I'm a former employee of the Bank of China, so I have a vested interest. I don't work there anymore. But I will tell you that I think the official numbers of non-performing loans at the 4 state-owned banks, which control at least 50% of lending in China, are probably a lot worse than people think. Then there's a whole bunch of other banks that are even in worse shape, much worse shape. In the Japan crisis in the 90s, we saw a lot of the peripheral banks run into deep problems.
We've got 15 seconds. We've got 15 seconds, Andrew. Right now, the PMI number, the official PMI number, we're going to wait and see the HSBC. Is that correct? We're just going to wait a little bit.
Yeah, the HSBC is a lot more reliable.
Andrew Collier is managing director at Orient Capital Research. He is based in Hong Kong. He's traveling. He's in New York. Gordon Chang of Forbes.com. I'm John Batchelor. We're waiting on the HSBC PMI number, the non-official, the one we trust, the one investors want to hear, and especially investors who are fleeing to the Caribbean. This is the John Batchelor Show.